Hello everyone, this is Dr. Good Vibe from OmegaSupreme.com. It is October the 11th, 2010, and I'm going to be going through today's currency trades, Forex calendar, and latest Forex news. Let's get started on the Forex calendar. Nothing really interesting happening this Monday, October the 11th, as it was a bank holiday in the US as well as a bank holiday in Canada. So not a lot of movement, and that's fine by me as I'm still trading for yield. In currency news, really on Bloomberg, nothing major. Some major tension stuff going on. Nothing really spectacular other than the U.S. versus China currency reserve hitting 2.5 trillion. Really, it's stoking tensions in the news, but more likely a slow news day, and nothing really going to be fascinating coming out of that. Other than other news in regards to the IMF taking on some new currency reporting structures, that's nothing new as well. Nothing rocking the currency world as we speak, so news-wise. Looking at the Euro USD, the Euro USD had a bit of a down day today. Nothing really crazy other than some profit taking. There had to be some profit taking, and actually I was kind of foreseeing some profit taking coming up. The USD had really depreciated quite too much too fast over the last month or so. So let's take a look at some of the currencies that I'm trading right now. And everything has pretty much flattened out on my favorite pair, the USD HUF. As you can see, I've been shorting and shorting and shorting and shorting all the way from right here at 22.1911, and that was my first short. And really, when the cross was about to happen, when we had a first close below the Tenkan-san here on the Ishimoku indicator, and so as I've been shorting along the way. My current position on the USD HUF is up total 943.6 pips. That's an average, so that's the average of all of these positions. So that's my position right here. So we're doing still very well on the USD HUF, but as you can see for the last few days, it's been very flat. This is a daily chart on the USD HUF. And it's been very flat for the last 2 days. As you can see, the candlesticks are very wide. There is no real direction with the price at this point in time. It's still choppy, and that's fine by me because this pays a great interest rate. You swap, so the longer I hold it, the more I get paid on the interest rate differential. Really, as you can see, the Tenkan-san is still flat. The Kijun-san is now coming down on the Ishimoku indicator, as well as if we take a look here, the Kumo cloud is still kind of wide coming down. The long-term trend is still on a downward trend here, but on an oversold basis, the CCI here is now kind of going towards zero, which means that it's not oversold anymore, which is actually a good notion to kind of trade based on this. Right now, it's still a hold. Still don't really do anything. The price may in fact retrace back down to 20168 or 2015 or even 201 even. I might even in fact close this position that I opened at 198.78 sometime soon, just to bank some profits and cushion some of these gains. I in fact may do that first thing in the morning tomorrow, as I don't feel that comfortable holding this position. Price seems to be kind of closing higher right here, higher lows, and so if let's take a look at a 4-hour chart, or rather a 3-hour chart. If we take a look, it's right in the Ishimoku cloud, and the Tenkan-san has closed above the Kijun-san on the Ishimoku indicator. So not a big fan of this. It looks like the trend may in fact change, and this sell right here at 198.33 or somewhere around there might in fact start getting into the negative. I may close this one that I opened, I think last Monday or last Tuesday, sometime tomorrow morning if the price comes closer to it. Really, I've been banking on the yield ever since last Monday, and I've been making quite a nice little swap rate every day since, but I'm not in the mood to hold on to a large negative position here. And really, okay, so that's it for the USD HUF. And really, as I've been expecting that the USD in general will appreciate against most other currencies over the next 2 weeks or so, that's my prediction. I have hedged a little and bought the Canadian dollar against the USD. If you take a look at the USD Canadian dollar on a 4-hour, on a one-day time frame, it's been in a very nice sort of range in the last, I'd say going back to May. And so as you can see, it's got this range right here, and again, it's at the low of this range. And so what I decided to do was hedge against the my other 3 positions that I have that are dollar negative, and I bought the USD versus the Canadian dollar, which is at the bottom of its range, and planning on the USD appreciating against all other currencies. So at the moment, which I bought this currency at the beginning of the Aussie session, which is still up now 4 pips. Nothing major, but it's a bit of a hedge against my other positions. So I'm really going to be holding on to this. I'd be fascinated to see if the position breaks below this. That would be really breaking towards parity at this level here. So I'd be surprised if it gets down to this level. And even if it does get to parity, I will sell again, sell the Canadian dollar and buy the US dollar, because frankly I don't believe that they should be at parity. Let's take a look at my other positions. My USD Turkish Lira, the Turkish Lira was in the news the other day stating that they may in fact increase the interest rates over the next few months. They are having a very good economic sort of a windfall over the last few weeks, months rather, and so this nice little trend that's been going on that I've sold here and have been selling again and sold again, this position I've still got open. Really, if you take a look at the long-term trend on this, I don't believe that we're going to see any long-term movements that are going to be retracing back. It's also a great USD, it's also a great interest rate differential against the USD, so I don't really perceive to be selling into these positions, but I won't be buying any either. Again, it's a nice hold, so really nice hold against the US dollar. So let's take a look at my Aussie dollar. As you can see, like my USD HUF trade, it started to, for the last 4 or 5 days, if you've checked out my other videos, really I've stated that the Aussie dollar is not looking that hot anymore, and I plan on just hanging on to my initial buy that I've done here. So my position at 93.11, I plan on holding on to that position. I may add on to the position at 95.8 if it retraces back to this level, but I don't perceive it to do so anytime soon. Again, the Tenkan Sun is completely flat. The Kijun Sun is coming up to the Tenkan Sun, and that's not a good sign for the long-term trend. The Ishimoku cloud is, if you can see, it's still upward momentum, but I don't really see a lot of momentum coming up. The CCI is coming down. It's pointed downward, so I don't really see any upward bias, upward momentum at this time, unless some really negative news comes out of the Australian, or rather the American zone, for this to kind of bust out through all-time highs. So again, I don't really perceive this to change much right now. I'm still up 504 pips on average. Hey, look at that. I'm now up 6.3 pips on my long USD CAD. Not bad. I think I'm going to be able to hedge nicely against my other three dollar negative positions. And so let's see here. I don't perceive to add on to this Aussie position anytime soon. Like I've said already, the only add-on to this trading, to this account that I've done is the USD CAD, and that'll be the only addition I will do anytime soon for the next couple of days until I see some retracements, some major retracements on these other markets. So let's take a look at my results so far. My results for October the 11th are 9.43% right now, realized profit and loss. That's a gain over my 9.18% on October the 8th and 9.07% on October the 6th. So I'm doing very well. Not really doing any, haven't closed any positions over the last couple of days. So the last few gains have only been through interest rate gains. So these are interest rate swap that I've been gaining in the account. My net asset value, that's realized plus unrealized gains, is at 31.94% again. That's above the 29.14 and the 32.11 over the last 5 days. My average return for my actual trading has been 7.97%. My standard deviation has been 1.35%. And if we look at the risk-free return, which would be 2%, we would have a Sharpe ratio of 4.4. Not bad, considering that if you actually put your money in an S&P index fund, the S&P 500 would only return about 3.59% on average, which would bring down, which would give it a Sharpe ratio of 1.65. If we take a look at the chart here, this is the net asset value in red. The blue is realized P&L, and the purple is S&P 500. So hands down beating the S&P 500 in realized P&L, and quite a lot beating the S&P 500 in net asset value. Mind you, the net asset value I've been marking to market daily, and so that you will see some volatility there in the marking to market. However, again, this style of trading is all about capturing as much yield as possible, trading emerging market. So anyway, this is Dr. Good Vibe. These are my results from Toronto, Monday, October the 11th, 7:41 p.m. Eastern Standard Time. Thank you and good night.